welcome to another market update. Once again, I'm your host, Lee Cantrell. Last week, the U.S. equity market shook off the September swoon and started October by ending the losing streak of the past few weeks. 10 of the 11 S&P 500 sectors were green, with the energy sector losing 2.9% as oil prices dropped by about 8%. The last trading day of the week was full of news, including the September non-farm payrolls, which increased by 661,000. Now that was below expectations of around 800,000. The biggest headline, though, was the pre-market announcement that President Trump and First Lady Melania both tested positive for COVID-19. This week, stocks opened solidly higher on President Trump's health status update. The S&P 500 index started higher, coming off its first positive week in the last 5. Reports of optimism that policymakers soon may find a middle ground on a stimulus package are fueling a strong open to the week. Asian markets were broadly higher, led by Hong Kong and Japan, while China's markets were closed on Monday for a holiday. European stocks were also broadly higher. Now, looking at other COVID-19 news. New cases in the United States rose on Saturday and Sunday on a week-over-week basis, lifting the 7-day average slightly to around 43,291. Hospitalizations have stabilized, falling both days week over week, but the 7-day average, unfortunately, is still 7% higher than the prior week. Looking at the week ahead. This week's economic calendar includes the September Purchasing Managers Index for Services from Market and the Institute for Supply Management on Monday. Auto sales, the U.S. Bureau of Labor Statistics August Jobs Turnover Survey, and August balance of trade data will come out on Tuesday. The Federal Reserve minutes from the September 15th and 16th policy meeting and consumer credit will be announced on Wednesday, followed by the jobless claims on Thursday and wholesale inventories on Friday. Additionally, the vice presidential debate will be on Wednesday. Now, this draws our attention back to the election and a key point. Stocks and politics don't mix. As a concern over the upcoming election continues to build, one of the questions we're getting is whether our investors should sell ahead of the election for fear that the party they don't want to win takes over the White House. Politics can have an impact, but it should be noted that there were people who disagreed with many of the items President Barack Obama's administration implemented and missed on strong market gains by sitting on the sidelines. And that same sentiment applies to those who took their money out of the market due to disagreements over President Donald Trump's administration. As tempting as it might be, we continue to focus on the economy instead. Look, whoever wins the election in November is going to take over an improving economy, and one that likely won't see a recession in 2021, and that matters much more to stocks. There are continued signs that the economy is improving. The Federal Reserve is doing what it can to help spur confidence and liquidity in the markets. When we couple this with the previously mentioned optimism over an additional stimulus package, we see the potential that the winner of the election will inherit an improving economy and one that will stand a good chance of staying strong in 2021. We're excited about what the future holds, but we are optimistically cautious moving forward. This has been your market update. Thanks for watching. See you next time.